Hello, everyone. Thanks for joining in today. I know it's a long weekend and a holiday, but this is the best slot that we could find. So, our agenda for today is going to be a little bit of rebalance related discussion. And then, based on whatever has happened with the election results, let's just take a quick look at where the markets are expected to head, or what is the general trend, what's been the general trend historically. And then we'll get to the most important section, which is a deep dive into the value and momentum small case. And then obviously we'll open up the floor for question and answers. So let's get started. We've not made too many changes on the thematic side of things this time. With brand value and specialty chemicals, we've not made any changes, and the constituents have been retained as is. But with our model small cases, there has been fair amount of churn that's happened. Starting with value and momentum small case, companies like Oil India, NCC, Minda Corporation, Marksons Pharma, all of these have been dropped. In their place, we have included Steel Authority of India, Motilal Oswal Financial Services, Kirloskar Engine, Indus Towers, Hindustan Aeronautics, and Engineers India. Same kind of trend happening with Cancelam also. Sonata Software, Arvind once again, Tapari Industries, Global Health getting dropped. And in the place of these four companies, we've added five other companies: Hindustan Aeronautics, Bharat Electronics, Titagar Rail Systems, sort of like the defense rail systems kind of combo working for us with constant Cancelam is small case. Next, with growth at fair price, a lot of churn here. Titagar has been dropped here, added on the other side. PCBL has been dropped. Minda Corporation once again dropped from here also. Gokul Das dropped. Electronic Smart, EIH, all of them dropped. And in its place, a couple of companies like Kirloskar Engines, Global Health, Zydus Life Sciences, Indus Towers. We've seen those additions in other small cases also. They've also been added over here. And then we have quality small caps companies, Zensa Technologies, Chennai Petroleum and Castrol getting dropped, and Railtel, Man Infra Construction, and LT Foods getting added. Straight flush, five companies out and four companies in its place. So one question that we got, so what happened was the model rebalance happened on June 1st. And then we had the election results coming out on June 4th. And obviously, sort of like, the election results did not go in favor of what was generally expected or what was generally predicted by exit polls. And a lot of people sort of like, came in concerned asking that, okay, so probably you made these changes in the model small cases based on specific expectations about what kind of government that we're going to have and all of these things. But now that that is not happening, what are your, what is your thought process? Are you going to make changes to the model small case? Will you be dropping a whole host of, defense and PSU companies and these kinds of questions? So let me just reiterate this again. I've told this historically also. As far as modern small cases are concerned, political developments, short-term considerations, all of these things don't factor at all. The only thing that matters when it comes to modern small cases is whether the companies are meeting the model criteria or not. What is the amount of returns that the companies have made, whether they are in favor during this particular season, not in favor during this particular season. Maybe they are in momentum and you should simply add it to the small case. These kinds of things don't matter at all. It has to meet the model criteria, then it gets added to the small case. It does not meet that model criteria, then regardless of the situation, it's going to get dropped from the small case. So this is the story that we're going to keep talking about during every rebalance. So let me reiterate that again. Any sort of like concerns around like that it's a coalition government, so you should probably not have defense companies, you should not have PSUs, and all of these things will not work for model small cases. Okay, so that is as far as the rebalance related stuff was concerned. Now let's quickly move on to what actually did not work this time. So we saw a whole host of changes. Two criteria was something that we saw that consistently kept, sort of like, failing. One was the value criteria. A whole host of companies have sort of run up since March 2023. So in value and momentum small case, in great growth at fair price small case, in cancel risk, in all of these places where there is a value criteria as part of the small case, we saw a whole host of companies, because they have run up over the last couple of quarters and stuff like that, they failed to sort of meet this particular this specific criteria. And the second thing that we sort of saw failing was the momentum criteria. Once again, the same reason. They have run up over the last couple of quarters or couple of months, and there is not enough momentum left in the stock. Their momentum indicators were negative, which is why we had to drop them from the small case. So these were the two sort of main criteria that kept getting failed, which is why there was a lot of churn as far as modern small cases were concerned. Next, moving on to unraveling the market's path. This basically, I think, if the elections had gone the way most people had expected or the exit polls had predicted, there would not have been too much of scope for discussion. But now that the elections have not gone that way, let's just quickly jump in. I'm not going to spend too much time on this because a lot of analysis has already come in over the last 12, 13 days or 2 weeks sort of thing. So I just want to specify a few numbers, and then we can move on. If there are any specific questions, you can just ask me later. So first thing, what happens when it comes to elections is volatility sort of starts spiking before the election results come out. You can see that over here in these charts, 2009, 2014, 2019, volatility. Volatility, we are measuring it using the Nifty VIX data. There's something called a VIX index, volatility index. You can just Google it and check. And this sort of attempts to capture what is the volatility in the market. And you can see that the last three elections also, the same thing sort of happened. Volatility spiked before the elections. As election results came out, regardless the expectation of the election results, volatility started dropping down. So the same thing has happened this time also. You can see that 3 months prior to the election results, which is since 4th March 2024, the volatility was fairly stable. But then around 30th of April, it started spiking. There was a lot of volatility around, the result day, on the result day, and the markets also sort of tanked because the results were not on expected lines. But since then, the markets have calmed down, and we can see that the number is sort of returning to the 3-month historical average line. Okay, so that is as far as volatility is concerned. Now, what happens in the immediate aftermath in terms of market movement? So you can see that what happens for market in the short term. I have pulled up the returns 3 months before election, and that is the blue line that's showing up over there, and then returns 3 months after election, which is the red line showing up. Obviously, this 2024 has to come in with an asterisk which says this is not, the red line is not actually returned 3 months after election. It is just returns 2 weeks after election now. So in 2009, the market was very, very bullish in terms of UPA2, about the performance of UPA2 government and all of those things. There was 24.5% hike before the election, and then after the election also the sort of bull run continued. And there was the little bit of background of what had happened during the 2008 financial crisis and all of those things, and markets had sort of started recovering. So that also provided tailwind during 2009. In 2014 also, market was expecting that Modi would get elected to the government. So there was a 7.2% run up before the election, and that sort of got confirmed during the election. And probably nobody had expected a sort of a full power BJP government, and that sort of provided a tailwind. So market was up 11.6%. 2019, the expectation was there that that Modi government would win. So that was a tailwind, 6.7% run up before the election. Once the results came out, for whatever reason, the markets were like, okay, like we sort of predicted this. This was the returns. This was the run up before. There was a run up before the election, and so we can take a breather now kind of scenario. This time around, once again, see, this time the expectation was that Modi government is going to come back in power. And that was one of the reasons that had been driving the market since March 2023. Like I said, one of the reasons. So we were already in the midst of a bull run, though since the start of this year, there's been a little bit of a breather. So the run up before the election was not too much. It was just about 0.3%. But since, the incumbent party has sort of come into power, even though it is a coalition government and stuff like that, markets on the day of the election were quite nervous, but since then they seem to have recovered. The next day itself, the markets have fairly recovered, and since then you have seen that it's run up about 4%. So this is the performance. This has been the historical performance in the short term, and and sort of for various reasons we are sort of expecting that this not so negative returns are going to continue, in the short term as well. So this is as far as the short-term performance is concerned. What happens in the long term? Now, there are a couple of things that sort of works in the long run for any bullish stock market performance. One, the government has to be stable. Second, there has to be policy continuity and implementation of that policy. And then the third and most important factor is what happens on the macro environment side, right? So let's just quickly check each one of these things. We have had the BJP government winning at least 243 seats or 242 seats in that ballpark area. It's the single largest party. Nobody else is as close in terms of number of seats and stuff like that. And overall, so far, it looks like, it's going to be a stable government. Of course, like, you have alliance partners this time. They are part of the government and they will all have their own, preferences in terms of specific policies. So it's going to be slightly more noisier when it comes to, the previous two governments. Some minister from a non-BJP party is going to come out and say that, this particular scheme or this particular, government policy doesn't work in our state, or we should take a relook at that and stuff like that. And this has already happened in terms of specific reservation policies, in terms of Agni scheme and all of these things. There have been some, noises coming out. And this is something that BJP, which is the main party in power, sort of has to manage. But if you sort of look at the composition of the government and the ministers and everything, one thing that stands out is most of the ministers have sort of retained their portfolios, or the people who have come on board come in with a wealth of administrative experience. Whether it was there are a whole host of chief ministers from different states who have come on to who have gone on to become the cabinet ministers this time. They come in with a wealth of experience in terms of administration and stuff like that. So it does not look like there's been a lot of compromises that have been made in terms of allocation of ministries, and most of the important ministries have been BJP continues to be in power, or it is the BJP ministers who sort of have held on to most of the important ministries, right? So given that scenario, I think sort of the expectation is that this is going to be a stable government. Second, in terms of policy continuity and implementation, there are three major states where elections did not go on expected lines: Maharashtra, Uttar Pradesh, and Rajasthan. And I have been watching analysis around all of these three states, and it seems like, at least the analysis that I have been watching, it seems like the expectation is that, or the issues that did not work for them in these three states were fairly local and had nothing to do with the macro policies that the government was following. So inflation has sort of been trending down. Yesterday, there was an income inequality report that sort of came down. You can look it up online. There's like an interesting discussion. And pre-election, a lot of the discussion was around, flatlining of rural real wages and all of these things. But what seems to have happened over the last 10 years is that urban-rural inequality seems to have sort of started coming down. So that is another factor. And in terms of income inequality within rural areas also, there seems to have things seems to have significantly improved with inequality coming down. And one of the other important things when it comes to expenditure, monthly consumption expenditure, seems to be extreme poverty seems to have dropped down, which is like a huge thing. Right. So all of these factors seems to be, and all of these things have happened over the last, the report was between 2011 and 2024. And for the most part, it is the BJP government which has been in power. So it seems like, though there are local factors which did not work during this election, and they sort of the number of MPs dropped below the expectation, there are a whole host of other things that seems to have gone their way. So the expectation is that there is going to be a lot of policy continuity and implementation. And in terms of, in terms of rural spending, in terms of, things like Manrega, Jal Jeevan Mission, affordable housing, and all of these things, these were all sort of things that sort of affected the rural area positively. So there is no reason to believe that the government is going to be rolling back any one of these schemes, right? So the expectation is that the government is going to continue to do what it has already been doing. And obviously, the third and final factor is the macro environment. It is anybody's guess as to how the macro environment is going to behave. So far, the expectation seems to be that India is doing fairly well, and the expectation is that it is going to continue at 8% going forward. It remains to be seen. So these three factors put together contribute to the stock market performance over the long run. At least two of those factors seems to be seems to have stabilized for now. The macro factor is anybody's guess. There are a whole host of things which are outside of our control, that works over there. So I'll leave this discussion at that. So moving on from there, I think now let's get to the most important part of this presentation. We wanted to sort of we did a deep dive into value and momentum small case. We checked to see this particular analysis that I'm going to present to you talks about how the small case has performed, what has been driving its performance over the last couple of years, and things like that. So for those who are uninitiated, the value and momentum small case is one of the best performing small cases of Windmill Capital. It is also one of our most subscribed small cases. The small case has been around since the last 7 years, so there is like a long-term performance that we can present to you. And the small case basically attempts to pick up stocks that are undervalued, but who have been witnessing momentum because of various reasons. And we put these stocks into a basket because of the way the selection criteria has been set up, which is value and momentum. There is a lot of selection of mid and small cap companies into the basket. A lot of you have invested. Some of you have called me to talk to me about this particular small case. And I always keep telling people there is a lot of mid and small cap companies in this small case. It's extremely volatile. And if you're interested in investing in it, you should always come in with a 4 to 7 years time frame, right? That is what I've been telling you about the value and momentum small case. So that is as far as the small case itself is concerned for the uninitiated. Now let's take a quick look at how the small case has stacked up, or what has been driving the performance of the small case over the since its inception, right? Now, the first thing, since its inception, there are 244 individual stocks which have been added and dropped from this particular small case, right? So that is 244 different companies which have been part of this small case, which have been at some point in time over the last 6 to 7 years that have been undervalued and witnessing momentum. And the next one, the mean number of 159.2377, that basically tells you what is the average holding period. The average holding period is approximately about 5 months, right? The second one, then there is the min 25%, 50%, and 75%, and the max number. The max number basically tells you what is the maximum holding period for a stock, which has been close to 2.2 years, 815 days. And the mean number tells you the minimum holding period for a particular stock has been close to 2 months, which is about 57 days. There could be some corporate action. Usually the rebalance time frame is 3 months, 90 days. But there might have been some, historically, there might have been some corporate action, which is why we might have dropped a particular small case, a particular company from the small case, which is why the minimum duration is 57 and not 91. Usually, you can see that the average holding period comes up to about 92 days, right? That 50% mark that you're seeing. So this is as far as the number of companies there are. What is the mean holding period, which is about 5 months. Keep that in mind. That's going to be important later on. What is the maximum in number? Now, the next thing that I want to show you, this is very interesting. Okay. Now, in this chart, what we have done is we have pulled up we have plotted all those companies that have generated positive returns, right? Out of the 244 companies, we have selected only those companies that have generated a positive return, and we have put it onto the chart. So the way to understand this chart is the x-axis represents the hold duration, and you can see that the hold duration could be either 100 days or a little bit of 100 days, which is 91 days or 180 days or 270 days, and so on and so forth. And the y-axis represents the returns. It could be 0 to 100 to 200, 300, 500. There is one stock, Apar Industries, which has generated 500% returns. So what you can see is, you can see a lot of green dots. Each green dot represents one single company. And if you sort of if you sort of look at FNXC, right, which is the ticker, what it means is it's been approximately held for 316 days. And during that particular 360-day period, it has generated close to 250% returns, right? That is how you should read the chart. So what you can see that you can see these lot of green dots over here around the 90-day line, and some equal number of or even more number of green charts around the 180-day line, and then 300. So you can see a lot of clustering here around the 100, 200, and 300-day mark. And then there are few outliers. Obviously, Apar Industries is an outlier. We've held it for close to, I don't know, something like 650 days, and then It has generated a stupendous return of 500%. And then there are also companies like NTPC, MAHM, and all of these things that we've held for a longer period of time that have generated good amount of returns. So even if I ignore anything that's been in the above 300 frame, you can see that there is a lot of clustering around 100, 200, and 300 days, and they've all generated good amount of positive returns. It's not just positive returns. It's not just 1-2% returns that they've generated. It's like, a lot of them have generated close to upwards of 50% returns, right? That is one thing that I would like to draw your attention to. I'm going to tell you a little more about why I'm drawing your attention to that, but hold that thought, okay? Now, next one here, I'm going to talk about companies that have generated negative returns, right? Once again, the way to look at this particular chart, x-axis denotes hold duration, y-axis denotes return, but then obviously this return is all negative. Read it as negative. There is 0, negative 10, 20, 30, and 40. Now, what do you see here? Around the 90-day mark, there is a lot of clustering, okay? Which means these red companies have been held on only for 90 days. They've generated a negative return and we've dropped it, okay? Very similarly, around the 180-day mark, lot of companies generates negative returns, get drops from the basket. And then a couple of different companies that have been held on for a longer time and that have generated negative returns. Okay, so now this is very important. When it comes to value and momentum small case or any momentum small case, investors have repeatedly asked us to increase the rebalance time period, decrease the rebalance time period. The suggestion that we always keep getting is, rebalance, you are doing it at 90 days, momentum will be lost, you should do it once every week, you should do it once every month, you should do it once every 15 days, and all of these things. People have suggested this during the AMA also. People have suggested on calls also. Some of you have been very abusive and you have told that, because I'm lazy, we are not rebalancing this, within 15 days also. All of those things happen. Now, let's look at the evidence for rebalancing earlier. So 0 to 90 days, out of the 244 individual stocks, 136 stocks have been held on for 0 to 90 days. And look at the average returns that they've generated, just 2.73%, right? Just 2.73%, 0 to 90 days. What happens to stocks that stay on in the basket between 90 days to 1 year? There are 97 such stocks. So this is not an anomaly. 97 stocks out of 244 is not a small number, but they end up generating close to 20% returns, right? Close to 20%. The longer, in case of a momentum small case, the longer that I'm holding on to it, which is something that we've been reiterating through all our AMAs, we keep saying there is no evidence that momentum is going to be lost within a short period of time. That is not the way it works. And here is the proof, right? The proof is here. 90 days to 1 year, 97 stocks, 19.48% returns. And there are few stocks which we have held on for more than 1 year. There are just 11 of them, and they've generated an average about 135% returns. That's okay. We don't need to get into them. So here is the proof, right? 90 days to 1 year. These are the stocks that have been, and it's not like we've been holding on to these stocks because we have some specific insight into this. It answers the model criteria and we hold on to it, right? And those stocks have generated close to 20% returns. The ones where, once again, the model criteria gets answered, they fail, the average returns is 2.73%. So now you can imagine what is going to happen if I start rebalancing once every 15 days or once every month or once every week also, like some people have suggested, right? Your average returns, you can extrapolate the data that is over here, and you can imagine the only thing that's going to happen is we are going to do a lot of churning, which means a lot of cost for you people, and the average returns is going to drop drastically, right? That is the takeaway. So now to sort of coming to the conclusion point. So total positions that we have taken, these are not the individual stocks. Some of them have gone in and come out and all of these things. So the total positions that we have taken, 430, right? The average returns for each one of these positions is about 7.2%. Out of those 430 positions, we have generated for positive returns in 264 positions, which means more than half of the times we have been right in our prediction. That is 61% of the times we have been correct in our understanding of how the stock is going to perform. And when we have been right, we have been very, very right. You can see that this close to 19% returns. Like we've generated, whenever we've been right, we've generated very high returns. 38% of the times we've been wrong. the stock has not really worked for us and it has generated a negative position. And we've generated a negative position. What has happened is we've lost just 12% of the money. So here we are generating 19% of the money. So on an average, we are right most of the times, or at least 61% of the times. And when we are right, we are generating 19% returns. When we are wrong only 38% of the times. And when we are wrong, we have lost only 12% for each stock that we have held on, right? And that is exactly how there's been significant outperformance in the value and momentum small case over the long term, right? So I hope this is sort of useful for those who have invested in the small case. For those of you who have not invested in the small case, I hope this gives you some perspective about the value and momentum small case. And if it fits within your risk profile, and if you are interested in it, you might want to consider investing in the small case. If you are seriously considering investing, just reach out to me. There are coupon codes that I can share with you. If you have any more questions about value and momentum small case, also you can write into support@windmill.capital, and I'll be more than happy to answer any questions that you might have. So that pretty much brings us to the end of the session. In terms of presentation, there's nothing else that I want to discuss. Let's just quickly move on to questions and see, what are the questions that people have. Okay. So first question, expected lines. Shiva Rakshit is saying, I'm a subscriber for value and momentum small case. Why is monthly rebalancing not done versus quarterly rebalancing? I observe momentum factor changes significant on a monthly frequency, and many other small cases are also rebalancing weekly. Okay, Shiva, I hope my presentation has convinced you against this, sort of monthly rebalancing, weekly rebalancing, or whatever it is. Atul Ghai is also saying same thing. Rebalancing must be done on fortnightly or monthly basis. All right. So I hope that answers your question. And then Shiva Rakshit again, what is the employees team size, Windmill Capital doing research, operations, macro study, etc. We have about 6 people. Shiva, is there any PMS products in Windmill Capital apart from small case? No, we don't have any exposure to PMS side of things. Andrew John, in case of sudden market fluctuations that are anticipated, will Windmill send out suggestion or will it stick to quarterly update only? Andrew, I've told this time and again, sudden market fluctuations are no reason for us to sort of churn our basket. Like I have already told you at the beginning of this session, the only reason why stocks are added or dropped is because they would have either met the model criteria, which means we've retained them or added them to the basket, or they don't meet the model criteria, which is why we'll drop them from the basket. Those are the only two reasons. There might be exceptional situations. There might be a corporate governance issue that popped up between two rebalances. There might be some development, some statutory action, and these kinds of things which popped up between two rebalances. And in such cases, we will certainly end up taking action and drop a particular company from the basket. But otherwise, market fluctuation, not a reason. Nirmal Pandey is asking, I'm a value and momentum subscriber. A general question about how to cope with the pressure of volatility once the corpus reaches beyond your dream target, like 1 crore. Your reviews will be appreciated. Nirmal, if you already have this amount of money and you're not comfortable with the volatility associated with the small case, then you can partially exit, pay down your position, and invest in something safe. Okay. Shiva Rakshit, what are the drawbacks in just using value and momentum factors against from the overall list of factors like quality, safety, with gold growth, etc.? Shiva, I've talked about this in multiple, presentations. There's something called core and satellite investing. You can go back to our previous AMA session and also watch it. There's something like core and satellite investing. Your core investing should have access to or should give you exposure to a little bit of large cap equities, which is a little bit of gold, debt, and all of these things. And value and momentum should only be a fast moving satellite, right? Do read a little more about core and satellite investing. We have done sessions around that. There is a lot of material available online that will answer your questions. Deepak Arora, hello. Are you still bullish on the PSU stocks that you've added before elections? Thanks. Deepak, I already told you the stocks were added because they met the model criteria. Elections are just one event that sort of takes place. In the long term, there is no there's no effect of elections on stock market performance. There are a whole host of other things that positively or negatively affect stock market performance. I hope that answers your question, which was the summary of our entire presentation. DM, it is not about removing all the stocks every month. It is about removing the underperforming stocks. Like DM, I told you, model criteria is the only reason why a stock gets added or dropped from a particular small case. Whether it is underperforming, overperforming, outperforming is not a criteria at all. That is not a reason why we will add or drop a particular small company from a small case. And we will end up dropping most of these small cases if they have not been witnessing momentum. They will get dropped at the 90-day mark. So how does dropping them at the 13-day mark improve the performance of your basket? So that's something one has to think about. Santosh Shrestha is asking, is it a good time to start fresh investment into value and momentum? Time horizon is about 3 years. Santosh, like I told you, 4 to 7 years is the time frame that I would generally suggest for a value and momentum small case. अरुण कुमार, लाइफ टाइम हाई होने पर इन्वेस्टमेंट स्ट्रेटजी क्या होना चाहिए? I am not too sure which lifetime high you are referring to, so sort of please clarify. Vivid is saying, do we expect rebalance again in June as we just had rebalance in May? We did not have any. I mean, are you referring to quality small cap smart beta? That particular small case is rebalanced once every month. No other small cases are rebalanced. So, and we've sent out rebalances for everything, both our model as well as thematic and sectoral small cases. So there's not going to be any other rebalance in the near term. This time rebalance done. Ojasvi is asking, this time rebalance done ahead of normal schedule. Any particular reason for that? No, I don't think Ojasvi did anything. I think it was that notification was sent just 1 day prior. Instead of, we did not want to send it out on a Friday and sort of because it's going to be a long weekend. We did not want to hold on, which is why we sent it out 1 day prior. That's all. There is no other reason apart from that. Jinesh Shah is asking, how much is the subscription fee? I'm assuming you're talking about subscription fee for value and momentum small case. It's 8,000 rupees per year. You can go on to Windmill Capital's website. All the details are available over there. Take a look at that. Deepak Singh, how can I get the coupon code for subscription? Write into support@windmill.capital, right? Prashant is asking, is the SIP of 15,000 per month enough for this small case after initial investment? So Prashant, what I usually suggest when talking about this particular small case is, see, there is a fee component of 8,000 rupees and the minimum investment amount is somewhere in the 1 lakh plus range, right? And what one should sort of aim for when they're investing in a small case like this is the expense ratio has to come down to 1%, which is usually what a mutual fund also charges, right? So the expense ratio is 8,000 rupees divided by the amount of money you have invested. So if you've invested only about 1 lakh or 1,20,000 rupees, the expense ratio is certainly more than that. It's certainly more than 1,000. So my suggestion always is, please invest for the long term. And when you're investing for the long term, make sure that you scale up your investment amount to about 8 lakh rupees so that the expense ratio drops down. So keep those things in mind when you have fixed 15,000 rupees. I don't want to really come out and say, is it enough or not? I mean, I don't know how to answer the is it enough question. Is it enough based on whose risk perspective? Are you able to take all of that risk of investing 8 lakh rupees into value and momentum small case? Is your entire corpus so big? So all of these factors come into question, right? So think of all of those things and then you can decide by yourself whether it is enough or not. The Windy Pine, how will Indian markets behave once Fed US starts cutting rates? Sir, we don't know how it will behave. US Fed cutting rates is just one factor. Usually what happens is if the Fed starts cutting rates, if the debt market rates sort of start going down, then equity markets tend to do well. And if the US equity markets tend to do well, some of the FPI money might get rerouted. So that is, some of the FPI money might get rerouted is what we can stick to, is what we can speculate. Whether that will happen, how much will happen, what is the time frame when it will happen, we don't really know, right? So that's how it is. Deepak Singh is asking, which algorithms are you using to train the models and what are the variables? Variables are simple: value factor and momentum factor. We are checking to see whether the companies have low PE compared to their sector PE. We are checking to see whether the stock price over the last 1 year has been showing momentum when compared to momentum of the Nifty 50 index. As simple as that. Santosh, how subscription model works? Santosh, basically what you have to do is, in terms of free small cases, you can just come in, you don't have to pay any money. You can check to see what is the minimum investment amount and you can start investing. But when it comes to subscription model, you will first have to give us a you'll have to give a subscription fee. Then it opens up the investment avenue for you. Then you can choose to invest in that particular small case. Before subscription, you will not be able to witness any constituents and weights within that particular small case. After subscription, you can witness the constituents and weights. And if you like to, you can start investing in that particular small case. And as long as you are subscribed to that particular small case, you will continue to receive rebalance updates, and you will have access to the latest weights and constituents of that particular model small case. So that is how it works. Funny Kumar, do you suggest or include any AI stocks for the future? I don't think there are too many AI companies listed in Indian stock markets, or pure AI companies. Some of the IT services and consulting companies might already be working on giving some AI sort of solutions and stuff like that. If this come up and if they meet the model criteria, then yes, we will certainly add them to the basket. Ojasvi, the schedule is around 15th of month, but it happened before the election result. No. Ojasvi, correction. The model small cases, we changed the rebalance dates from 15th to sort of the 1st of June this year. And this was done last year also. So we've just sort of been following the same pattern. The next rebalance for model small cases is going to be June, July, August, September is going to be September, and non-models are going to be sent 15 days later, around September 15. So just a correction over there. Ankit Khetan, in value and momentum, min and maximum investment amount that you suggest. So the minimum investment amount is what is going to be suggested by the model, or it's going to be visible to you on the platform itself. And the max investment amount, there is no ceiling that we have set for you. You can take a call depending on sort of what is your risk-taking ability, what is the size of your corpus. Consider all of these things, and then you can take a call on what is the maximum amount of money that you can invest in this particular small case. Avdesh Singh, what about EV related small cases? Are those good to invest? Yes, we have. Good to invest or not is up to each individual. We have something called electric mobility small case. The performance of we were one of the first portfolio managers to launch a small case around the EV revolution and whatever has been happening. Recently, Nifty also came up with their EV and automotive transportation index. So you can sort of stand. I hope that gives you a perspective about the evolving EV landscape or EV ecosystem within the country. And anywhere in India, I'm sure you've been witnessing a lot more EV vehicles on the road. So that sort of should give you a perspective. There's something called the electric mobility small case, Avdesh. Go out and check it out. There's a detailed blog written about explaining why we are launching the EV small case and all of these things, right? Anand Agarwal, I have subscribed to value and momentum. When do we book profit? It's totally up to you. It's not like a close-ended scheme or anything of that sort. If you feel you have made good amount of money, you can exit that particular small case, or sort of partially exit. You can take a call, Anand. So just to clarify to everybody, Windmill Capital is a research analyst. That's a licensing category under SEBI heading, just like how you have mutual fund licenses, investment advisor licenses, or PMS licenses. Windmill Capital is a research analyst. Now, research analysts cannot give any suggestions or recommendations about specific small cases. We cannot come out and say this particular small case is good for you and bad for you, or we cannot say this is a good time to invest in a particular small case, or this is a bad time to invest in a particular small case. This is due to compliance reasons. I'm not trying to be rude to anyone of you by not suggesting or recommending anything. Due to compliance reasons, we will not be able to tell you that. And even at a basic level, Anand, I'm not too sure how much profit you have made on that particular small case. What is the corpus that you have invested? And this corpus is what percentage of your total investment and all of those things. So without having seen all of those things, it's impossible for me to answer your question. So I hope you understand where I'm coming from, right? Avdesh, same question. Anand Jain, I'm looking to invest in mid and small cap for long term. Which small case would you suggest? We just talked about value and momentum small case, Anand. You can check out value and momentum. You can check out CanSlim. You can check out quality small cap smart beta. All of these small cases sort of give exposure to a lot of exposure to mid and small cap companies. Once again, disclaimer, this is not a recommendation or a suggestion. I'm just asking you to check out these small cases, check to see whether they meet your risk criteria, whether you are satisfied with the investment theme and all of these things, and then you can go ahead and invest. Abhinandan, when we have exit partially to book profit, when we have exit partially, when it's not to book profit. Okay, Abhinandan, I'm not too sure what the question is over here. Santosh is saying value and momentum with asset allocation. I see both are exactly including its stock weights. Can you please share difference? It says debt and gold, but I don't see it. Okay, so Santosh is a good question actually. So value and momentum small case, I told you we are looking to get in companies which are low PE, but at the same time witnessing momentum and stuff like that, right? So what we did was there are four small cases that we picked up. We saw that these small cases were fairly high volatility, and we wanted to give investors a slightly different flavor who are not ready for that high volatility. So we included the asset allocation version of that small case. So there are four small cases for which there is an asset allocation version: value and momentum, canceling, growth at fair price, and straight flush small case. So how these asset allocation works is when the volatility in the market is on the lower side, we will give you exposure to the pure equity strategy, which is the full value and momentum or canceling or growth at fair price or straight flush small case. But when the momentum starts increasing, our models will intimate about us about that. And when the momentum starts increasing, what we will do is we will completely exit the equity part of the small case. And in its place, we will replace that with debt, gold, and a little bit of liquid ETFs, right? So that is how it works. Since currently the momentum, our models have not indicated the market momentum is very high, we are fully invested in the pure equity strategy. When the markets indicate high momentum, we are going to exit out of the pure equity strategy, replace that with gold, debt, and liquid ETF. And which, since we have been exposed to the pure equity strategy for a long period of time, you can see that over the last last year or so, the asset allocation versions have also performed very, very well in line with the underlying pure equity strategy. So I hope that answers your question. So there are questions around Siemens and impact of bonus issue and all of those things. All of these can just be Googled. It has got nothing to do with Windmill Capital or small case. So I'll leave it out. Deepak Arora, does value and momentum strategy work in a bear market as well? If yes, how? So I mean, yes, it does work well in a bear market. You can just go onto the small case and pull out the performance of the small case. A typical example of a bear market was somewhere between October 2021 and March 2023, or Jan 2022 and March 2023, depending on which index you're looking at. During this particular time, the value and momentum small case has worked in such a manner that the momentum, that the small case performance has been very flat, whereas the equity small cap index and the equity mid cap index have actually delivered negative returns during this time. In our historical presentations, we've sort of we've talked about all of these. It's available on the small case YouTube channel. You can check it out. So how does it work is essentially it has flatline. You've seen flat performance over more than 15 months, whereas during the same period, the comparable index has delivered negative returns. And then when the momentum was back, starting March 2023, the value and momentum small case has generated extraordinary returns when compared to the comparable index once again. So that is how it works in a bear market. Andrew Chon, how to exit certain amount from the small case without affecting the structure of the portfolio? Andrew, use the partial exit option. Tips Manjrekar, I received a rebalancing request for Tata, but I don't do it. Is it fine? Well, if you don't do it, the returns of your portfolio will start varying from that of the model portfolio, but that's totally up to you whether you want to do a rebalance or not. So you can take a call on that. Jacob is asking, sir, any small case available with gold exposure? So you can take a look at equity and gold. This has a fixed exposure of 70% to equity and 30% to gold. Kindly check that out. Deepak Singh, once we receive the dividend, how does the small case adjust? Whether it reduces the purchase price on increase the current dividend, or dividend is not included in the returns in small case app. So our index series sort of makes adjustments for all of these corporate actions, Deepak. Svetank Avasti is saying, any update on growth and income small case is being actively followed by Windmill Capital. Yes, we are certainly actively following it. Just like all other model small cases, that has also been rebalanced recently. If we had stopped for tracking it, or if we had stopped rebalancing it, you would have received a notification. Should I shift to some other better small case from your company? That's totally up to you. At least as far as growth and income is concerned, we are actively tracking it, and yes, whatever, you will continue to receive rebalance updates for it. Rahul Kumar, what is the difference between steady assets and stable assets? Can you give me an example of small case? Very broad question, Rahul Kumar. I have no idea what is the context in which you are asking me these questions. Pawan Kumar Reddy, hi. What strategy we need to follow while booking partial profits in small cases like quality small cap or value and momentum? I'm not sure why you need a strategy. If you feel the small case has run up fairly and you've made you've made enough amount of money, you can use the partial exit button that's available to you on the app itself. Uh, and automatically the algorithm will take care of the stock sold and everything, such that the original structure of the small case remains intact. So there is not too much of other things that you need to consider. At least given your question, that is what I can think about. So I think the questions are getting a little too here and there outside the scope of small case and Windmill Capital. And I think we'll stop at that. We've discussed this entire thing for about 50 minutes now. So there you have. Sort of enjoy the rest of your day, please. Thanks.